Hi there, welcome to Kneppy Invest. Time to have another look at a company called Mad Paws. It's been about 1 year, maybe even 2 years, since I last had a look at this company. However, the company is close to becoming operating cash flow and free cash flow positive. And if they can become consistently positive in their cash flow on a quarterly basis, even a half-year basis, I think that would be a very good sign for this company moving forward. Now, in regards to the name of the company, I'm not sure if it's absolute genius to call the company Mad Paws or absolutely foolish because of that closeness to mad cow disease. However, the company has been growing, so obviously people who use Mad Paws services and products don't really care about the name. And to be honest with you, Mad Paws is in a pretty good sector, a sector that should be growing quite well over the next few decades as we as humans start to spend more money, more and more money on our pets. And that is what Mad Paws is doing now. They are a vertically integrated pet solution and product company, and they have a lot of products and solutions along all the ranges of things that pet owners want to see. For instance, pet insurance, the #1 online pharmacy for pets, food and nutrition, top-rated dog food subscription called Dinner Pole, Mad Paws Pet Services Marketplace in regards to training, exercising, minding, and grooming, entertainment, Waggly, which is all about toys and treats. That is a subscription, and also high growth premium dog bed. So this is a vertically integrated pet supply or pet services and product company. 328,000 customers, 112,000 transactions in the second quarter of financial year 23. And they just mentioned in this particular slide the amount of cross-selling they are able to do. Another interesting aspect about Mad Paws is how they derive their revenue. And you would think there's different ways they derive their revenue because this is a vertically integrated business. So they have recurring revenue. They also have revenue from subscription and e-commerce. In the recurring revenue, that comes from the marketplace. So pet sitting, daycare, dog walking, house visits, that sort of thing. So if you have a dog walking business, you can put that onto the marketplace. And the way Mad Paws get revenue from that, they just have a fee, a service and booking fee, 20% from the sitter, 7% from the pet owner. And in their subscription and e-commerce, they get revenue from that. And they are aiming for a margin between 30 and 40%. So that has to do with Dinner Bowl, which is food, pet insurance, including Mad Paws pet insurance, and also Waggly, which is toys and treats. They also have a Waggly Club, which is subscription. Mad Paws has been around for almost 10 years, founded in about 2014, and the two founders are still with the business. Jan Packus is the chairman, and Justice Hammer, who in a different life would have been a judge or maybe a lawyer, he's the group CEO and executive director. Now, I do look at these sort of situations when the founders are still in the company because they do have an emotional investment with the company. They want to see Mad Paws survive, not only survive, but also grow and succeed. So it's good to see that the founder's still in the business. As I mentioned, Mad Paws founded in 2014 and listed on the ASX almost 2 years ago on the 26th of March 2021. The largest shareholder of the company is Bombora Investment. I think they have been adding to their investment. So obviously they see something to like in this company. At this point in time, their stake in Mad Paws totals 17.8% of the business. The current market cap of Mad Paws is 55 million. That's at a share price of 17 cents. The share price hasn't been doing much over the past 2 years, and we'll have a look at the chart lastly or towards the end of this video. And the ticker for this company is MPA. Before we have a look at the quarterly report for the December quarter in financial year 23, let's just go back 1 year ago just to see how this company has performed over the past year. We want to see receipts growing, and we want to see an improvement in the operating cash outflow. So 1 year ago in the December quarter, they were operating cash flow negative by 809,000. They also had receipts from customers of just shy of $6 million. You could say they had plenty of cash, $8.9 million of cash, but Cash on hand actually fell about $1 million in this particular quarter. So that's just over 2 million or 2 years of cash if they continue to burn through about $1 million of cash per quarter. So no sign of any need for capital raising within the next year after this particular quarter. Now on to the most recent quarter report for the company, the December quarter for financial year 23. Things we want to see is growth in receipts and to see where the company has become operating cash flow positive. And they have. But we'll talk about that in a second. Now, receipts have grown significantly, up $6.1 million to $12.2 million. So receipts have doubled in the past year. And for the first 6 months of financial year 23, receipts were $22.5 million. Now, the company does spend a lot of money, particularly on product manufacturing operating costs, $8.9 million there. But the company was operating cash flow positive by $238,000. Now, they were positive thanks to government grants and tax incentives, which added $411,000 to the kitty. Now, in my opinion, and this is just my opinion, government grants and tax incentives don't belong in the operating activities section because it can skew a 1 quarter result. Sometimes you'll see some companies have government grants of say $5 to $10 million, and then they'll announce they were operating cash flow positive for that 1 quarter. So I always take government grants and tax incentives into account. And if you do, Mad Paws was not operating cash flow positive in this particular quarter. They would have been negative by about $170,000. However, they're very close to becoming operating cash flow positive. Now, they're not free cash flow positive because cash on hand actually did fall by $200,000. And at the end of this quarter, they had $200,000 or $3.3 million of cash on hand. So the main thing when I look at these sort of quarter reports is just the increase in cash receipts and how much the spending has increased also. So receipts up $6.1 million and product manufacturing operating costs up $5 million. So that's very important that receipts are growing at a quicker rate than product manufacturing and operating costs. Staff costs and administration costs didn't grow all that much, only up $360,000. So if they could put a lid on staff costs and administration costs, I think this company could become operating cash flow positive fairly quickly and on a continuing basis. Another thing to like about Mad Paws is just the nice growth in cash receipts over the past 6 to 8 quarters. Receipts in the September quarter 2021 was only $2.3 million, and it's grown to $12.2 million in the last 6 quarters. So that's a nice growth in receipts. Some of that might have been due to some acquisitions the company has made, but it's been a consistent growth. Not only has the company seen a nice growth in cash receipts, the company is close to becoming operating cash flow positive. So a lot to like about Mad Paws right now. That's not talking about the business. So if I did talk about the business, there are some things I don't really like there in terms of the moat, the competitive advantage that this company might have or might not have. So those are some things to take into account when you look at the growth in cash receipts, when you look at the fact that the company is close to becoming operating cash flow positive. And to be honest, when you do look at the daily chart for Mad Paws, and this goes back to just after they listed on the ASX, the market isn't that interested in this company. And one of the ways I determine interest in a company from the market is just looking at volume. If you see really light volume, very, very low volume, that is telling us the market isn't interested. And when you see high volume or increasing volume, the market is starting to get more interested. And for Mad Paws, the highest volume we saw was in the first 2 months this company was listed. And that's why the share price is just going sideways. We have seen periods of time where there's a little bit of hype in this company and where the share price does go on a little bit of a nice run. And there's also periods of time when the share price has fallen a significant amount, particularly in 2022, when the share price fell from about 25 cents to a low of 11.5 cents, but that was because of the overall negative sentiment in the market. Now, that negative sentiment in the market has turned positive since or in the last 2 or 3 months, and that's why Mad Paws shares have been rising. And the main reason it's been rising isn't because of anything positive from the company per se, because the company is still operating cash flow and free cash flow negative, but there's less sellers out there because the overall positive sentiment in the market. So less sellers, a little bit more demand, very slight more demand. And that's why the share price has risen from a low of 11.5 cents to a current share price of 17.5 cents. But the main thing here is share price is starting to creep slowly higher. That's all I have looking at Mad Paws December quarter for financial year 23. The company is close to becoming operating cash flow and free cash flow positive. You could argue they were for the December quarter, thanks to government grants and tax incentives, but I've already told you why I don't like to include that in the operating activities section of the Appendix 4C. If you have any questions about Mad Paws, if you love this company, hate this company, I'd love to hear from you. So leave in the comment section your thoughts. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day.